Thanks, Roland. Thanks very much. So I'm super excited to jumpstart this panel. We're running a little late, but we still get to use our full 30 minutes. But with that in mind, what I've done is I have into the chat session for everyone to have inserted the links to the bios for our two wonderful speakers for this fireside chat. So that way I can do a very brief introduction and not waste precious time. It is my pleasure to introduce Roland Scharrer, who is, among other things, the current Group Chief of Emerging Technology, Chief of Emerging Technology and Data Officer at AXA. But if you were to ask Central Casting to craft from the beginning, the perfect person to land at the intersection of industry, insurance, computer science innovation, and computable contracts, you would order up somebody and Roland would show up. And we'll probably tap some of his background, which is both fascinating and perfect for what he does. Similarly, I'm very happy to introduce the Commissioner, Michael Pieciak, and I'm going to ask him to pronounce his last name correctly, because we've been having a debate behind the scenes in the chat about the perfect way to say it. And I'm sure I said it wrong, so I'll have him correct me in just a moment. But I also want to say, again, if you had called up Central Casting, you would say, please send me someone who's kind of a lifelong public policy wonk, clearly interested in technology, goes to and does outstanding work at a law school, spends some time at a couple elite firms, spends some time in DC, and then goes home and gets appointed by the governor to be the head of the Vermont Department of Financial Regulation, which, by the way, covers insurance, finance, and a lot of other areas. So both of our panelists today are going to actually talk about what the prior panel set up beautifully, and that is, what's really happening on the ground, what's about to happen, what's happening now, what's really going on. So first, I am going to actually invite the Commissioner to tell us all exactly how to say your last name. Welcome, Commissioner. Do you mind correcting us?
Well, Dan, thank you. Thank you very much for having me. It's a pleasure to be here, and don't feel bad. My mom and my dad actually pronounce my last name differently than each other, so I go by my mom's pronunciation, which is Pieciak.
Excellent. All right. Well, thank you very much. We now know it. I'll make sure I get it right. I'm actually just going to jump in straight to kind of a level setting question. We got a lot of technical and then analysis of what is or isn't working on the ground, and a lot of admonitions about what the industry needs to do to really see computable contracts move forward generally, and in our case, particularly in insurance. So the question is, what's really happening now? We named this is the FutureLaw conference, but how future is this? How far away is genuine practical implementation of computable contracts? And spoiler alert, I think we have it among us, right? It is here, but I'd love it if maybe, Roland, you could take just a minute or two and tell us where you think the state of the industry is. And then I'm going to ask the same question to Michael, really to kind of highlight from his viewpoint.
Yes, thank you very much. Thank you much, Dan, for the introduction and the warm welcome. I would like to reconfirm what Oliver said. Actually, computable contracts is not just an idea anymore. It's something that is happening, and in our insurance company, we are doing that one since a few years now already. During the time, we even did not have the term of computable contracts. It was like just a necessity to fix an imminent problem in our industry. We started around 2018 with first testing, 2019 doing pilot deployments, and now since the last 2 years we are live with computable contracts. And over the time we realized that there's a common trend around that one, and jump started together with Stanford and the bigger audience around the room.
Great, and I'm going to drill down and get you to be more specific about some examples in a minute, but maybe I'll invite the Commissioner to jump in and say, you're an exceptional regulator in an unusual state that's kind of ahead of the curve in a lot of ways, but maybe you can tell us, this is on your radar screen. How long has it been? How much of a reality is it for you? What do you think about your peers in other states around the world?
Yeah, for sure. Well, thanks for the question. So, it's been on certainly our screen in Vermont for a while. I would just say the advent of new technologies to analyze risk, to analyze data, to make the insurance process more efficient. I'll just put it in that broadest category. Certainly, we saw it maybe 4, 5, 6, 7 years ago with companies coming up with new ways of doing underwriting. So how do they take all the data that they have? How do they make certain insights that maybe one wouldn't make on the face of it. So they develop complex algorithms to run the data through and make these sort of insights and determinations that help more narrowly tailor contracts and risk. You know, just one example of that, the algorithms. I mean, on the regulator side, you know, we want to understand what they are. We want to be able to have them be transparent to us, to the consumer. One of my colleagues asked a company to provide it with all the detail behind its algorithm, and they sent this colleague 122,000 pages, I think it was, that explained their algorithm that was the basis of their underwriting. So, you know, I think that put it on the radar for all regulators that this is something we need to understand better. We need to be at the forefront of it. We can't, you know, let it get ahead of us because we wouldn't be doing our jobs. And, you know, ever since that realization, we've been trying to find opportunities at our department to become better familiarized with the blockchain technology, with different technologies that insurance companies are rolling out. And two examples I can give of that are an agreement that we reached with our Secretary of State to roll out an opportunity for captive insurance companies to maintain their captive license on a digital ledger. We were very excited about that project. We worked on it in 2019. That's when we announced it. The pandemic has knocked it off its course a little bit. So we'll see if we get back to that. But it was a very small project that allowed us as regulators to better understand the technology. We weren't trying to necessarily fundamentally change the way we regulate. It was just an opportunity for us to get better acquainted and our team to get better acquainted with the folks on the ground. And then we also launched an InsurTech sandbox in 2020 as well. And again, that was sidetracked a little bit by the pandemic. But it was another opportunity for us as regulators to have an open mind to new processes, new technologies, to deliver insurance and deliver better experience for consumers. And again, that's something that we hope to revive once we finally put the pandemic behind us.
That's great. And in fact, your answer highlights something I think that is a reality for consumers and whether they be business or individuals. And that is the technologies themselves are not particularly important in their distinctions from each other for them. Some perhaps if they're very interested, but in reality, it's the confluence of all these technologies that change their experience and availability and maybe pricing for products. And so they're not going to distinguish between, you know, AI, machine learning, underwriting techniques from, you know, smart contract or, you know, computable contract deployment in the, you know, coverage analysis and the like, but we have to, right? That's a part of our charge in a way to parse that, which brings me to a kind of a follow-up question for Roland, which is, so it's very clear from the last 2 hours and your answers, this technology is in play. It's relevant to industry. There's some early beginnings that are real. I mean, they are in the ecosystem, they are sold, they're regulated and the like, and yet still, and I think this question should make, you know, Oliver and Michael happy. And yet more people know the price of Bitcoin than know the definition of the phrase computable contract, right? And every time you talk to someone about it, they slip into the AI side of it. And yet we have this low hanging fruit on the computable contract side. And so I guess my question to you, Roland, is at the industry level, is this also a problem? And how do you kind of see through it so that we can focus on, at least for our purposes right now, this issue that really advances the industry? And I'll have a bunch of follow-ups that go back to kind of the basics of what we're trying to solve. But I wonder if you have an observation about that, where you ask about computable contracts and people end up talking about the price of Bitcoin and talk about AI, and then you realize they may not want to talk about computable contracts. Why?
Okay. Dan, to answer the question, I would like to start from our thought process that we had around 2018. Because we went back to, to solve one of the eminent problems of the insurance. Because when you think about insurance business, we, of course, drive towards digitalization, but we digitalize everything besides the 50 to 100 pages contract that everybody has in mind. The product in itself. So we digitalize all the processes around that one, making nice digital front ends and mobile apps and whatever, but the contract in itself is something we never touched. And this was our starting point, saying, hey, look, we have to actually do that one, because then we have digitalization by design. And we started with simple things, because when you dismantle what is insurance, what is the insurance product, it goes back to the concept that Oliver described, that Michael described earlier, about that kind of legal binding promise. Legal binding promise in terms of terms and conditions are inclusions and exclusions about something that is covered in that you own, or cover your health, something like that. In the end, it's about big logical question around that one, a logic representation. Your car is insured against vandalism. So you have to define what is the car, what is vandalism, and how to map that one. This is the coverage of insurance. And this is the actual question that up to today, nobody can answer automatically. And that hinders and hindered in the past, actually A, full transparency, what is the insurance, and B, that you are getting your reimbursement in the so-called moment of truth when you need that one. Because there were a bunch of people, and they are still there, to actually read that kind of contracts manually to answer the question on behalf of the client or for the client. Even the client can answer that oneself. And this was the starting point. And we start with coverage check, and this was our quick win. Because this legitimates all investments. And coming back to Oliver's questions, is it worth? Yes, it's worth doing that one, because that coverage question keeps thousands of people busy, and really thousands of people. It's not just a few ones of doing them, all the claims handlers around that one. And from there, we moved in the direction that John in the previous panel also highlighted quite nicely in two directions. One is the automation, to automate that kind of coverage checking, doing that one, to have the existing contracts modeled and actually covered. And on the other side, to modelize contracts, because this brings you another level of computable contracts, because you dismantle what a contract is in itself, and you have like Lego bricks you can put together, and you have the same principles like you've learned in software engineering 20 years ago, or in the car industry 10 years ago, about mass customization, bringing contracts together by model that one, and that eases a lot of concepts around that.
And Roland, let me jump in and ask for a clarification. So first, I just want to highlight the painful reality of the fact that there aren't very many industries where the heart of the product is the contract, and yet insurance really is one of those industries, and certainly no industry that large, and yet that's the one place that most insurers haven't really gone all in on, not just digitalization, but essentially digitalization plus automation, right? And you highlight that. So, but my question is, you highlighted one of the big advantages, and that was understanding what was covered. So it's kind of a given as a consumer that I might be a little confused about coverage, but I was surprised to learn, because I came from the finance side, right, that insurers were as often, I won't say confused, but a little bit foggy about the aggregate and defined coverage. Could you define for us or clarify the difference between coverage and exposure? Because the exposure probability analysis seems quite amenable to the world of AI and the like, but this coverage part seems masterfully solved by computable contracts. So could you define those two differences for us?
Because when you are an insurer and you're building a new product for your clients, you actually have two things in mind. One is the written text, what is called the contract, the product you're selling. And on the other side is the risk exposure you're modeling. And these are two different things. One is the statistical model that goes by big numbers when it comes to the risk there, the risk of car accidents, the risk of diseases, the risk of property cases, something like that. This is the risk models that are usually there. They are mathematical models developed. And on the other side, what you're actually selling is written down text that is more logically driven on inclusions and exclusions. You saw, and that is still the case in the industry, is not a convergence of these two elements. They are still separate, the mathematical model and the written down text. And in the case of the client, you want to bring these two things together and driving them forward as one way. And this is what you do with computable contracts and modelizing the contracts. You're also bringing these two models closer together, and these two concepts closer together. They have the proper risk model and the proper coverage structure linked and more aligned to each other to get rid of that fogginess, what you have there, and that kind of fluffiness around the contracts, because you want to have that kind of transparency, in the best case, in a moderate manner.
Well, this brings us back to kind of brass tacks. I'm going to turn to Michael for this, which is, what are the problems that you think are being solved? And you can take the consumer viewpoint or the regulator viewpoint or a mix when you deploy technology like this. And I have a sense it has things to do with coverage and the like, but if you were talking to one of your constituents, one of your consumers, Michael, what would you say, hey, the reason we're paying attention to this is because we hope to solve A, B, and C, which I know is of concern to you?
Yeah, no, it's a great question. And just to touch on Roland's point, I mean, as a regulator, when you hear there's the risk model and then the coverage model and they're not speaking to each other, I mean, the first thing you think about is, okay, well, what kind of solvency analysis are you going to do on this insurance company? I mean, they have this risk model that's, very well done and sort of defines the risk, and then they've had the coverage. but if those aren't speaking to each other, they don't know, really in a worst case scenario, what is the sort of the stress that their product might be under. So I mean, just from a regulatory perspective, I wanted to add that. In terms of like the consumer experience, I'll just make one other point before answering your specific question. I think financial services and insurance, maybe in particular, was like one of these last disrupted industries. It's sort of this very traditional and sort of standard industry. And I think consumers, more than the industry itself, were demanding that it be transformed, that the experience be changed. The way that you reserve a hotel, get a taxi, have food delivered. I mean, consumers want it on demand. They want it on their phone. They want it easy. And I think a lot of those parts of the insurance process have changed. The computable contract piece that you're talking about is more, a consumer might not see that. They might not recognize that necessarily. It can benefit the consumer, but I think that it's more up to the insurance industry to drive that change. And maybe that's why we're seeing that not happen as quickly as some other elements of the industry. But in terms of the consumer experience, I think it can be really helpful in two parts. The first is just the experience that we've already talked about. So there's the onboarding experience. I think that's largely, pretty well, automated to some degree. That's sort of very technical and easy for a consumer. But then when you do have a claim, when you do have an issue, I mean, that claim handling process, the time that it could actually take you to get a payment, even when there's not a dispute in coverage or a dispute in what occurred, that can be, unacceptably long, particularly if you're the person waiting for your claim to come in, your check to come in. So I think that's a part of the process that certainly would be sped up and made more efficient as a result. It would also reduce the cost of insurance also. I mean, the amount of manual review and the manual process that goes into it, it would make that more efficient. It would reduce that amount of administrative burden that is required. And again, that would make it more more affordable, less expensive for the consumer, less expensive overall. So I think those are two, just very simple things that consumers would understand if you're trying to explain why is it beneficial.
Those are perfect. And I might invite Roland to jump in. I do want to throw out one quick point that we can be keeping in mind. About halfway through, we'll keep kind of pounding our way through. I'm rolling in some of the comments from the different questions. And I do want to acknowledge, Tom Kim's introductory comments that tied environmental, social, governance and justice issues to this issue. To your point, Commissioner, the idea that you have clarity, you have a reduction in cost that arguably makes it easier for other people to access. Insurance is arguably one of the 10 best inventions of the last millennia, right? And to make it more available to a wider range of people with different levels of income can make a fundamental difference in people's lives. We're going to come back to that because I don't want to lose sight of the actually quite lofty objectives and goals. And so, Roland, after invoking lofty objectives and goals, I'm going to ask you to throw in whatever comment you're going to make, but also maybe tie us to the near future and far future about what we will experience differently along the lines of what Michael hinted at, right? Like what will be faster, what will be easier, what will be clearer? Three things that, let's set access aside, but most people don't associate with their insurance company, those
thanks, Dan, for the question. Just to bring it to a real practical example. Travel insurance. Travel insurance, flight delays. Simple stuff you can usually answer. Flight is delayed, you get a reimbursement. These are kind of simple insurances. Let's go back to April last year, 2020. When companies in our countries were opening and closing their borders more or less on a daily basis, you had changes and things like that. What you had as an insurer from a consumer and a customer point of view is actually a change of the policy state on an almost daily basis or even intraday basis, because you have seen that kind of situations across the line, and you have a burst of requests coming from clients. And you cannot have thousands of call center employees simply waiting for the client. So actually you had the problem of managing that kind of burst and managing that kind of volatility of changes in the setting. And here, simple computable contracts in that easy setting play a critical role to drive the performance. We did that one last year and was live during that time to actually manage that one, because you can update the conditions in a real-time basis even with the external oracles around that one, about company borders open, company borders are closing, country borders are opening, airlines are actually flying not anymore, or things like that, and you can do that one. In that case, the fully digital contract is the one relief on that one. And from a consumer point of view, it's really the moment of truth. It's the moment of truth where when you are sitting at the airport, you want to know, is my flight now reimbursed or not? Or can I have a remediation or something like that? That you can answer that one almost in real time. And this is only possible if you have these kind of digital processes where you digitalize the heart of the insurance, hence the contract in itself. And these are things that are really valuable for the clients from a customer point of view, from a day-to-day nowadays reality. What you see now in the future more and more, that the concept of the insurance product in itself is breaking up. Because what you see still is you talk about a motor insurance, we talk about a household insurance, we talk about insurances that are based on sentences, contracts that have been predefined as 100 pages document that is written as it is. And what you do is you modelize that one more and more. So you're actually breaking up the different components and putting them together depending on the client needs, but without the burden of the big administrative overhead, because you can modelize that one automatically in a contract as code basis.
And so let's take your very, very practical on the ground example and highlight, by the way, even when the pandemic is past us, there are still volcanic activities in Iceland. There's, systemic failures at the computation level for whole airline industry. So these things will keep cropping up, but maybe take us even a little bit farther forward, whether it's 5 or 10 or 15 years, based on your estimation. What are some of the really radical things that will be different where, when email emerged, people thought, well, this is a clever way to save some postage, right? Which, of course, we have the good and bad of email, but by radically reducing transactions costs, by thin slicing people's activities, you create an explosion of innovation. What might that look like? And what role does the current industry play in making that be realized? And this is a question for both of you. Maybe throw stuff out. I'd love it if we could get to disagree. I worry we won't, but maybe Michael, if you have any examples, or Roland, feel free to jump in.
Just to start here, what you see is now a combination of the computable contract with external data more and more. Starts with external data like what we said, okay, the travel conditions, or flight plans, or the integration of IoT sensors. Hence, you're enhancing that contract with external data you're gathering around that one, and you see that one more and more and more going on. Hence, the contract in itself is a sole logical unit, but it's connected to external data points and to drive them forward. These are first steps in that direction, and then the contract or the reaction on the contract can be made based on the outside condition what is out there. For instance, the volcano is exploding. Okay, there's a detection there that can trigger some contract rules that actually are giving you risk mitigation. So the contract executes itself over time. And this is what you see more and more. And this is then the intersection of rules, codified rules, and things like decentralized ledgers and external data points you're actually gathering via sensors or external data providers. And this is how it's evolving over time to drive that forward.
Michael, any thoughts on that? And I might prompt you with a question from the audience, but maybe I'll let you go first.
Yeah, for sure. I mean, just to think big and radical, I mean, when you think of the next 10, 20 years, first I want to think about what are some of the things that are happening in the world that are likely to change. And I think one is certainly climate change. You know, we're seeing the impact of changing climate on insurers now. The weather patterns, the patterns of claims distribution and whatnot are being disrupted. So more and more automation of weather events, you know, in the future would be something that, again, would be good for the industry and for consumers to get people, particularly when it's a wide geographic area that might be impacted by a weather event, to get the claims determination made quickly and to get money out to people. I think that's important. When you think about some of the, and this is something that we've made some good progress on in the industry, but sort of these personal monitoring devices, whether it's on your phone or whether it's something you wear, or whether it's something in your car. I mean, at some point, those will become so sophisticated or embedded in our lives that when you have a car accident, it could potentially determine the significance of the impact and the damage and what needs to be fixed. And, the insurance coverage could click on, you could have the amount that you're owed in your bank account that afternoon. So, I think there are some radical things that potentially could come and change the industry over the next 10 to 20 years.
And you can even see some win-win in terms of industry expansion, with careful attention to avoiding consumer abuse. But if your driving patterns change and suddenly you're driving on freeways and driving in places that are rainy and you didn't do that before, you can imagine your insurance company popping up and saying, "Listen, you're a great driver and you've always had this really big deductible, but through no fault of your own, you're now in environments where you're much more likely to have a fender bender. Do you want to consider altering your deductible? Here's what it would cost. By the way, here's how we came to this conclusion." A, it'd be a little creepy, but B, I think in its most plain, it'd be kind of a great opportunity. Let me ask a question that is coming up a couple of times, and that is, if you took the idea of, and I'm just trying to conflate two of them together. If you took clever question askers are reposting their question several times, so I lost it. Here we are. So moving forward in terms of industry collaboration and the role of lawyers, there's a debate about whether or not, going back to the last panel, there's going to be this big bang moment of rewriting of all these contracts and insurance policies using computational, contracts approach, or is it going to be iterative, or are we going to legacy out certain policies and only move forward with new ones? I've now kind of wrapped up three different questions into one. It's a big question. Maybe Roland, you give a stab at this.
Yes.
And Commissioner, you might have a view from a regulatory viewpoint.
Very practically, you're doing both. On the one side, you want to understand what you have in your portfolio. And you do either NLP, natural language processing, to understand what is in the portfolio when it comes to coverages, or you model these contracts. Hence, we're also spending time, effort to model thousands of contracts and doing that one. And you have already graphical user interfaces that allow you to model that one in an easy way. And even people that are not programming expert can do that one nowadays. In our case, at AXA, it's called Product Studio, and the team is developing that one is also in the call. So feel free to reach out to them and driving them forward, and they model their contracts. And on the other side, you also go forward to actually build now, coming from wording libraries, from semantics, from align and standardization, towards that kind of assembly line on products and driving them forward in the future. You so backwards looking, analyzing that one, and forward looking, structuring that one. And you do actually both, depending on the kind of insurance. But what you realize is the fluffiness of the contract sometimes. For instance, contracts, very simple as it is, contracts have been built over years and years and years. And even the best lawyer will find our contract with 200-300 pages, inconsistencies from a logical point of view. And that is kind of interesting, because you want to get rid of these ones for the sake of the client and for the sake of your industry, to do that one right. The contract in itself, a legal contract that is 1,000 pages, has complexity by design. And you can do it by modeling. You can get rid of that one over time and driving them forward, because we acknowledge that this is something that is complex and has to change.
Great. By my measure, we only have about 3.5 minutes. I'm getting a time is up from Roland Vogel, but I'm going to push back for, I want our full 3.5 minutes. Commissioner, I don't know if you want to add anything to that, especially we've gotten a bunch of questions that go something like, and by the way, the United States, don't we have like 50 plus jurisdictions? Like, how does that work? Like, how do you manage this in the context of all of these different jurisdictions and globally to a certain extent the same problem? Any thoughts on that?
Yeah, let me answer both of those. So I think, on the first question, I think Roland's right. I mean, I'll just focus more on the iterative part of that, though, because that is sort of what I can sort of envision. Some of this is pretty radical for the insurance industry, for an insurance company, to sort of, not get rid of, but I guess repurpose your lawyers, some of your underwriting staff, some of your claims adjusters, relying on the computer, and and when the contract is executed, it's executed. You really want to know that your code, your contracts are logically laid out in the way that they're supposed to, and that they're working as they should. So I think I think there's some low-hanging fruit that insurance companies will be more comfortable taking on, things that are pretty straightforward, that have a very clear trigger, that are less likely to have claims coverage issues, that are less likely to be in dispute. And that's sort of the first step, or the beginning. And as there's more comfort within the industry, you could see moving to bigger and more more transformative endeavors. In terms of the 50 state regulators, we insurance is state-based. There's no real federal insurance regulator. There's the Federal Office of Insurance, and there's some federal regulation of insurance and health on the health side, but generally it is a state-based system. We work really collaboratively through something called the National Association of Insurance Commissioners. We have a lot of model rules. We have a lot of model policies that go through that association, and they get implemented at the states. And we're accredited by that organization. So if we're not living up to the standards that they have set, then we will lose our accreditation. Other states can't rely on the work that we're doing in Vermont. So that's a really critical piece of the framework. So we work as states. We also work with international regulators in the insurance space. That's something the NAIC does, is help bring the states together. But it's also the place where the United States interacts with all of the other world financial regulators also. So it's a critical organization, and they have been focused on technology for some time now.
And as we always knew, we would just run out of time on this. We had more than 50 great questions, including some really sophisticated ones about, what happens as industry goes more parametric and, there's less in claims processing. And I feel terrible that you haven't had a chance to address those, but I'll make sure they get passed on as we had discussed, and we may get back to folks. Also, I feel terrible that we didn't mention such cool experiments that each of you are conducting. So I will end with the following. Roland, you get 20 seconds just to say, what is either the biggest thing that stands in the way of the next great leap forward, or you can cherry pick the thing that you think is cool enough for everyone to think about as we end?
No, for me, it's quite clear. It's a call for action for the ones actually in other industries, and encourage them to work on computable contracts is worth doing, driving them forward. And we're also looking for partners to do that one, because insurance is just a player within an ecosystem. So within the motor industry, within the healthcare industry, within the various industries, but we are ensuring, hence, cross-industry collaboration is king, and cross-disciplinary work is king. So Michael, of course, as a regulator, working together on these things, because these challenges are bigger than ever. Hence, let's get rid of these artificial silos between industries and between disciplines, because the challenges in front of us are worth tackling, even if the holy grail of can we actually automate all insurances will never be achieved, because text is just a representation of reality, and it's just an abstraction of reality. Hence, it will never be there, but it's worth going in an iterative way in that direction.
So I'm gonna end with a promise, which is, if you are both willing, I will some way drag you back, and we'll do a standalone webinar to answer some of these great questions, because
nice.
they are so great.
Of course.
Sounds good.
I just want to thank you both. This has been wonderful. I wish we had 2 hours, not just 30 minutes, but it gives us a wonderful taste of where the industry is going. And again, thanks to the commissioner for having regulators out there like you. And thanks very much to Roland and your whole team, who really, with this industry collaboration strategy and being willing to be kind of on the vanguard, have made a big difference. So thanks very much for both of you.
Thank you very much.
And thank you also from me. Thank you, Roland. Thank you, Michael. Thank you, Dan, for a fantastic, very informative, very much to the point panel and fireside chat.